Hello, everyone, and welcome to the new episode of the Learn and Trade with Popeye. Today, I want to address, let's say, a quite particular but important topic, and is how to draw levels on a naked chart. Because I see many people are confused when they are to start to make a chart, to analyze a chart, and they don't know where exactly to start. So I would like to address some of the basics of drawing levels in the chart, where it would be important to pay attention or where would be important to do some business. We will check from high time frame to low time frame, and I will show some of my routine whenever I have a naked chart, a new chart in front of me, what I try to respect as a routine to map levels and to try to be objective as much as possible. Before moving to the chart, a big shout out to ZoomeX for sponsoring the video. Make sure to trade with me on ZoomeX. You will find the referral link on the description below. ZoomeX is a super cool exchange, non-KYC, so you can trade just by registering with an email address. It has a lot of cool function, and we run a lot of good campaign with the team. So don't miss out and make sure to use the referral link on the description below. Also, before moving to the chart, make sure to subscribe to the channel, leave a comment and a like as a sign of appreciation if you enjoy this kind of videos. But without further ado, let's move to the Bitcoin chart, as is the chart that we are more familiar with, and let's try to make some sense of what should be a normal standard routine to draw levels on a naked chart. Why is important to have to start from a naked chart is because our eyes, our brain get easily biased by what we see in front of our eyes. So always start from a naked chart means that you are starting with a neutral approach, with a neutral bias to the chart. And whatever levels you start to draw to the chart, remember, will somehow affect your decision making. If I draw this something like this, when this price action was evolving, you already would be tricked to see something on the chart. So always remember that whatever you put in the chart is something that will affect you. So remember time by time to remove everything from your chart and try to start from zero. Perhaps you will see something different. Perhaps you will evaluate the chart in a different way. And keep in mind that each chart should be, the level on each chart should be drawn with the same approach, so you will get consistency over the time, but always remember that the most important aspect of drawing levels on a chart is to develop some form of bias. And to have a form of bias, we always have to remember that market can do only three things. One is uptrending, so going to the top right corner. One is downtrending, so going to the bottom right corner. And the other one is going sideways. So whenever you draw levels and try to develop a bias, develop an interest on certain levels, always remember the basics. That is market structure creating an uptrend, market structure creating a downtrend, and no market structure, basically just a sideways price action. So always, whenever, especially if you are a swing trader, try to start from the highest time frame possible. Why? Because high time frame has less noise, so the candles you see in a high time frame are cutting out a lot of low time frame noise, and also because remember that market makers are usually trying to make business on high time frame level. So in high time frame level is where the real action is truly happening. So try to always start to map high time frame level, because this will give you an edge to avoid to trade not close enough to this level, because if you trade far from this level, usually you get low conviction setup. So this is the weekly chart on Bitcoin, and you can clearly see, to give you a few examples from the past price action, how the weekly level have been respected. So if you see even in the past, the last bull run, this level were pretty spot on. If you see with the weekly candle closure here at support, this was the support. It became clearly for a very long time a resistance level during the bear market. You can see how the weekly closure here created a swing failure pattern in the top and moved down. And you can see many other examples. I think one very clear example was this retest almost happening here, that in weekly level become very evident. So there is two concepts to understand very clearly when you map level. There is past price action that created support, resistance, level of interest, high volume levels, or whatever style you want to trade, and there is the new price action. So this create two different dynamics. So let's see here with the Bitcoin chart. To make it super clear and simple, we can say that past level of resistance was this one, more or less along with this one. Then we create, let's say, a little bit of a buffer here. This was a past resistance level that somehow continued to be resistance here back March until October last year, and this resistance level now is flipped in this potential support. So we call, I don't know the technical name, but to make it simple, this is a past level of interest. The new level of interest are the liquidity level that has been never retested, never retouched. So in this case, in the weekly, for Bitcoin would be more or less these two levels. So why these two levels are both important but have to be considered somehow in a different perspective? Because in the past level, there is a historical price action that can help us to guide us, because in that level there was interaction. So in this case, a potential resistance level now could potentially become a support level. So the dynamics here is that there is interaction, there is interest, and this level is an important level that we have to pay attention in the future. The new level are mainly of interest for the liquidity. You will find in the Learn and Trade with Popeye series a video completely dedicated on liquidity. But to make it simple, this is fresh liquidity where market could potentially go to hunt for stop loss, basically. So what we have here, we potentially have a lot of short position somewhere here with the stop loss just above that high, and we have here potentially on a time frame long position similarly to the short with their stop loss somewhere below this low. So in this case, both this liquidity level could be level that could fuel a reversal in the other level if hunted. What is the best example of this? This eye here. So as you can see here, if we this past price action, you can see that there was, in our case, we would have made the high there. We know that there is people that have put their stop loss somewhere here, and if we see the evolution of the move, more or less the price went there. Now if you put like this with the stop loss just above there, price moved there, hunted for the stop loss, and price started to at least initially reversed with almost a 10k drop. So now this liquidity has been hunted, is not anymore a level that we consider fresh, untouched, unswept, call it as you want, but is becoming the new one, that is this one. So whenever I do charting, I always try to see in the chart where are the levels that are virgin, that has never been touched, has never been retested after the move, because these levels are potentially interesting level to do business because there is untapped liquidity, so fresh liquidity. So in the case of old support level, this is not a fresh liquidity, but is a build up that happen here that create, relevance. In this case, the dynamic is different, is a fresh level where there is fresh liquidity that will be interested if hunted and manipulated. So in the case of the Bitcoin chart, to keep it super simple, you can see that we have, let's make this the fresh level, let's say the new level in red, and we see what are the most relevant level. We have an unswept here down here, very far away at 48, just for the sake of doing it properly. We have a big unswept level here, so without going too much down. And these are the weak, the level, the very strong area where the price moved in the other direction. On the top, we have only this because we are trading at all-time high. So on the weekly, you try to focus on support and resistance level and the unswept liquidity. The weekly chart is showing also another level here, I think, that is of interest. It will become blue. Sorry, I'm a bit paranoid to have everything in line. You always keep your chart clean and this level here that you will see on the weekly is an interesting level because it was weekly sort of support level on this move and become resistance here, and on the weekly then after we formed this low it was the level we sliced through. So if you can, if you want to if you can see clearly, this level was let's say somehow sort of relevant on the weekly candle. So this is the potential fresh support. The other part that we try to monitor are order block or supply, demand, whatever you want to call them, on weekly. So in this case, we make them gray. This is the kind of demand order block that created this move on. Also, you will find in the Learn and Trade with Popeye the video on order block. Without wasting time here in the video to analyze them, this is another order block that is confluent with this, so we can remove it to make it clear. And this red candle that we have before the impulsive move, and we have a demand here that was the last red candle before this move up. So this would be potentially a weekly demand. This will be a weekly order block, and this is potentially some sort of weekly order block because it didn't create a market structure break. I separate order block with demand whenever there is a market structure break. This potential. Okay, let's not be too technical about this, but these are weekly level that created this move up. So the last red candle before moving up. We can also map some internal liquidity level. This then will define them better on the daily, but potentially here we have these two internal. So this is external liquidity. This is, let's remain here in the most relevant level. Sorry, doesn't want to be catched. External liquidity. This is a support level, always weekly. And finally, these are the weekly internal liquidity. Now I will access on checking level just for the sake of the video. So we already have mapped several levels. We can zoom in a little bit and see that there is no other interesting level. Perhaps down here, I think we have all that we need. So we move on the daily, and we try to define further on daily level if we see something else. Always with the same concept, we can zoom in a little bit and see support and resistance level of the past and new level in case of untapped liquidity that can be of interest. So we can see that more or less on the past, this was the support resistance level. This is definitely a support level that we can see on the daily a little bit different, probably here. Do not get scared, I'm exaggerating with the level just for the sake of the video, but then the chart should become much more. This is potentially a resistance level on the daily, let's see if we can map better this resistance. I think this resistance here is a little bit subjective, but the level would be, to me, this one. It was deviated, but this is the 106 level that is always creating me a little bit trouble on the valuation. Let's say that this is a daily resistance level, and we start to define further levels. As you can see, the chart is starting to be populated. On the daily, we started to see some further untapped low, untapped high, and potentially support and resistance. And in the case here of Bitcoin, we can see that here there is a series of lows that has moved up. Again, in the video about the liquidity, you will understand the importance of this level. Here there is a series of lows. Then here there is a daily block. On the weekly, on the daily, we have a supply potentially. We always look for the unswept and untouched order block and supply. So in the case here, we did have a market structure break. So this was supply. Price failed to make another high. If we break further down here, something like this here would be the relevant order block. This is the last green candle for supply. And down below, I think we have all the level we are interested. So we started to see that the map is highly populated, and we know that the red liquidity is the one that is more important, especially for swing trade, and we know that the blue level are internal liquidity or support and resistance level. So how we can use this level? First of all, we have to form a bias. So whenever, as I said at the beginning, the bias can be of three types: uptrend, downtrend, and sideways price action. So in this case, if we start from the weekly, we can clearly say that our bias on the weekly is still bullish. Higher highs, higher lows, higher highs, higher lows, higher highs. So potentially on the weekly, we are looking for an higher lows. So we know, you can note here that weekly bias bullish interest in a higher lows. Okay. And where is, if we see the weekly level, the most interesting level for an higher lows is the weekly order block. So this is the last low we have. If this is the structure, so the best risk reward would be if the market is so generous to give us as close as possible to this weekly low, because it will give us the best invalidation. So the closer we would be able to enter to this low, then we don't know what the market will give us. If our invalidation is simply structure, our invalidation would be below this low here. So structure-wise, the closer we are here, the better it is. So we know that there is a weekly support level because we mapped. We know there is a weekly order block. And so already these two, weekly support level and weekly order block, are becoming interesting. We know also that there is an external liquidity, but what will happen if this external liquidity would be taken? Potentially the weekly structure would be broke and would endanger our weekly bias that is bullish, because the weekly bullish bias would be invalidated by a break of this structure. So while we map level, we mark something that is also very important, that I always use, that is the Fibonacci extension of this bullish move. If this is the high, we don't know if the price will continue to push higher. In case the price will continue to push higher from here without forming a low, our Fibonacci will need to be adapted there, but for the moment the high is here, so in case we get a drop, we know that the level of interest from a Fibonacci standpoint are the 0.75 and the golden pocket just there, and as you can see, we are starting to get confluence. And the confluence of our level on weekly perspective are the golden pocket that is exactly the weekly support level, so you already get a confluence on the weekly, and the Fibonacci 0.75 that is just in the middle of the weekly order block. So since we develop a bias on the weekly that is bullish, since we say just based on market structure, we are interested on catching the next weekly higher low. This, if this is a high, this is an interesting area for a higher low, because we do have support, we have the weekly order block, and the Fibonacci is telling us that we are exactly in one of the best places for the risk-reward ratio to look for a long. Because if we position ourselves here and we purely put our stop loss there, if you are looking for a weekly structure that is moving higher, we get a good risk reward just in this level, because if the price dip here and clear and continue in this weekly move, the level we have tested would be a good level to give us the proper entry. So from a weekly perspective, already we could say we have a trade setup in case market would visit the level that we want to enter at around 88, 83 if the price goes there, and we want to aim at a continuation of this weekly structure. So we further move down to the daily and we see what is happening in the daily to form our bias as always. Here, the situation is a little bit more complicated because we did have a daily uptrend, then we got a daily downtrend, now we have a daily uptrend, and now the situation is a little bit complicated. Why? Because as you can see, after this move that created this sort of structure, here technically we're starting to have the confusion. So that's why it's important, because from a daily structure point, this was an higher low, a lower low. And from a daily structure point, the daily structure, this is potentially a lower low, a lower high. So the price moved up like this and potentially broke down here very slightly, and now is doing something like this. So this could be the development of two things. As you know, could be uptrend, downtrend, or range. In this case, this could potentially start to be a range if this level is chopped up, or could be the beginning of the downtrend if we continue to move in this way. So why here is the importance of the bias and the ability to adapt of what happened? Because as you can see here, we are potentially starting to do this, but we don't know if this will happen, but we also know that potentially from what we see that it looks more like a sideways. As you can see, this is still a range bound environment similar to the one we had here, where you can see that market structure was a total fucking everybody and didn't care, because we get a low, then we get high, then we get probably higher low. People would have called this a higher low to move higher, but not. It break down, and this is exactly the place where you have to be aware that market structure become completely irrelevant. And what become relevant? It become only relevant the range. That in this case was this one, that the range breakdown, retested, and then we got a little downtrend. So this situation is a situation where mapping level and be aware of potentially two different bias become very important. But where this is happening, sorry if it become complicated, it's happening at daily resistance level. So here we have two issues that are complicating the price action we have here. Is an unknown, uncertain market structure. So it's a neutral, let's say, bias at the level, but is a neutral bias where just at resistance. So what can appear as a deviation and a move down. So how the levels here can start to help us? Because we know that if it's uncertain, like is uncertain here, we are more or less back here, similarly to what we have here, as you can see. So here, why the level could have helped us because we would have mapped this high, we would have mapped this low, and we would have known that this is a swap liquidity. So what happened? Both got fucked. This got fucked first, this got fucked second, and both cases they give a good movement on the other direction because these were the unswept high, this was the unswept low. What happened? First, we took out this and we moved there, we took out this and then we moved down. Then this is the typical ranging environment. So this is what can help us in this specific case. Why level can help us? Because we know that there is these two level of liquidity. So what you want to see? You want to see this level of liquidity, not what you want to see, how you can evaluate the evolution of this price action. If this level are taken and you get a strong rejection, this means that we will probably keep ranging as we did here. If this can take and move in the other direction, again, you have proof that is total fuckery, taking out, continue to go here, when? Until the auction of this price is breaking to either direction. So how you can understand that the auction of this price will move in the other direction, in this case of the daily, is daily candle closure. So if the daily start to break down and close below, means that the seller are in control, as we saw here. So here the importance of the internal, external liquidity. Or if the sellers start to break up and close above and not making this week, like we have this one, this week we have here, or this week we have here, you see these are clearly liquidity under the ranging environment. In that case, you could have, you can adapt your bias to the next move. So here the importance of mapping level and be ready to adapt to the bias. So on the daily, we have a neutral bias in this case, because we don't know what this price action will do. So if we have to take our daily bias is neutral. Level are telling us to be careful. The daily bias become neutral, but where can be that our bias is, let's say, adapted? In the case of the weekly interest, we said the bias is still bullish. The daily bias can definitely become bearish if we start to do this, but we know that this level is the level of interest just above a daily support level. So whatever your trend bias gives you, still support and resistance or the block and demand are level where you can at least double check your bias. So the neutrality of a bias is, need to be explained. How explain? Potential range, exploit liquidity levels. 2, range breaks, trend resumption. I will explain. Structure plus support and resistance. So let's explain this point. So why is important to form a bias and to be aware of the level? Because we say that this level can continue to range. If it continue to range, where we are interested? Internally in this range or externally in this range. You always wait for reaction. So if this level is visited, is a daily supply, you get a low time frame break, you try to short with a stop loss here. If this level is deviated, again, you do the same. You wait for a ring failure pattern here, you try to enter after the deviation, stop loss is here, and you look for a move the other side. Same here. Move here, wait for a break, market structure break on the other direction after the sweep, and you move down. When this game will finish? When somebody inside this range have win the battle and the price would start to find accepting in the other way. So you don't touch it. Let's say whatever you trade inside this range, you have to be aware that is a potentially ranging environment until it's broken. So should the range finally be broken and we find acceptance above, you stop to trade the range and the levels will not be more relevant anymore. The same on the move down. Should the trend continue, so exploit the liquidity levels, that we say are these and the supply that you have mapped or the internal liquidity. But you are neutral, your bias is neutral. If this range is resolved to the upside, you will look for trend continuation above. If it's breaking down, we do have two problems. That again, you know that this is also support and resistance level. This level was deviated above, this level was deviated below. So now we are looking for a visit back at support. And support, we already marked, is a support level just around the daily OB and where this liquidity is. So you already know that whatever happens in the market, thanks to the level that you have selected, you already can develop a bias or a trade plan according to the time frame you are trying to monitor. Hope it's not making too much confusion. Let me cancel some stuff, and we'll finally go to the 4 hour to see the last, let's say, part to finally have, let's say, a smaller time frame. Immediately here you can see that on the 4 hour there is a support level. Define till you reach, let's say, something that is interesting you trading wise. This is in this case the liquidity we mentioned. It could be potentially the place. The supply and resistance level are the same. If you want to see what is happening, you always use also when you map level Fibonacci, and you will see that we are still trading on the 0.75 of this move. So potentially we are still in bullish territory along with this 4 hour support. So you can see that this 0.75 is broken, support is broken. We are potentially coming to take this low here below. But you can also see that here there was a support, price is holding, so here could be potentially another level for a potential long. So you will see this video when this price action will be already developed, but for you to understand of level of interest that you can map whenever you see. So this support is evident, the 0.75 is evident. If we do the bearish, we see that more or less we deviated there. We can also make some further fib of relevance. I don't see anything interesting here because this was already tapped and we go down. So on the 4 hour, then you can further map your levels, and in the case of the 4 hour, you have on this bearish move here further supply. You see that is moved down, and you know that here there is demand. This is our famous weekly support, weekly resistance level. So what you see here, if we get rejected once again here, this structure now has somehow turned bearishly because it's clearly going down. Potentially, if that was the high, you can look for something like this. When we come down here, you have again a support. So in case, you can look for a structure break and a move to the other direction. But you can see that again in the 4 hour, structure on the daily was ranging. So we did have range, up move, breakdown, going down, up move, and now we are potentially moving down like this. So what is more powerful here, the structure or the range? Clearly the range, because every time we reach support, the structure turn from bearish to bullish. Every time we reach the resistance, structure turn from bullish to bearish. So this is what you have to expect as long as this range continue to hold. So should the price go back here in a bullish structure, you will look for a reversal. And should the price come down here, or as it did here in support, here potentially you can expect the structure break once again. So why levels are important? Are important because in combination with understanding of structure, ranges, and moving, there are level, you map level where you are relaxed, you wait for this level to be visited, and you try to develop your and you try to adjust your bias or your trading position according to the level, according to the reaction of the price in the levels you see. Whenever you reach liquidity, fresh liquidity, as we say here, we potentially look for a reversal. Whenever we look at past resistance support level, same, we look for a potential reversal on the other direction. So I hope it's not too much confusing, but always remember this difference. And of the old price action, as we explain here, and the new price action in terms of liquidity, always try to develop bias. And once you develop the bias, you develop interest on certain levels. If you are willing to take any trade, let's say by mapping drawings level, as I explained, make sure to do it with me on ZoomeX. ZoomeX has an integrated charting platform where you can do exactly the same mapping on level I have explained. You have all the basically replication of all the function of trading view, so you can chart and draw level directly here, and then you can trade as in most of the exchange with a lot of function, stop loss, taking profit, using isolated or cross margin, with leverage up to 150%. So make sure you trade with me on ZoomeX. You will find the link in the referral link in the description below, and you will not miss also all the nice campaign we are running with the ZoomeX team. So just to sum up the video, a few point. Always start drawing level from the weekly to have high time frame, to use the strength of the high time frame that is not giving noise. Always differentiate, as we have here, from old price action that is relevant, support and resistance level, and new price action for level that has been unswept. So unswept low, unswept high. For the new price action, remember that always we have unswept highs, unswept low, and we have internal and external liquidity. External should be the most extreme, the most external, as the name saying. Internal are lows and highs side this external liquidity. Once you map your level, double check your bias. Once you form a bias, try to trade on the level you have mapped according to the bias you have formed. So if you have formed a weekly bullish bias, you will use daily or weekly support, demand, unswept liquidity as a potential entry for a long position because your weekly bias is bullish. So always, last tip, always map level from a naked chart to avoid having preconcept and preformed bias. So you will make sure that every time you approach a chart with a very neutral and unbiased objectivity. So I think the video was a little bit complicated. Let me know in the question below if something is not clear. I can do further explanation. Make sure to trade with me on ZoomeX. And before leaving the video, leave a comment and a like, and make sure you are subscribed to the channel. We'll see you in the next video. Take care and stay safe up there. Bye.